So welcome everyone. I am lucky enough to have Ron Insana just finished his appearance on CNBC. Thanks for making time to talk about the economy today, Ron.
Of course, sir. Always a pleasure.
Sir, my goodness, we're getting very formal. So Ron, looking at the economy, there's so much talk about the numbers and things being at odds with one another. And are we talking ourselves into a potential recession? So many small businesses out there in particular are looking and struggling with availability of goods, struggling with inflation. What is your best advice to small business people at this stage of the game?
I think small businesses, on the one hand, should have been, shepherding cash all along in order to, prepare for a rainy day. It's always a wise move. What I'm hearing from some small businesses, though, is that while inflation is a problem, they've also had some pricing power that's improved their profit margins, even though they may be paying more for raw materials or imported goods to the extent that they're available. So in an environment like this, where the economy, for all intents and purposes, is still growing in nominal or dollar terms, even if you adjust for inflation, it appears to be contracting. The economy is still growing. The unemployment rate is still near historic lows, and people are, at least at the moment, still spending money. So there may be some precautions small businesses could take if the Fed, for instance, overdoes its rate hike policies and pushes us into a real recession. Having some additional cash to shore up one's balance sheets would be a good idea. But also, every time there's a contraction, a lot of business people make the same mistake, which is to rein in spending, which is to pull back from advertising, and which is to walk away from prospective customers that they could take from their rival businesses. Sometimes you expand into a recession if you have a strong enough balance sheet, if you have the financial wherewithal, and you gain market share. And so it's always, I think, good to remember that in any set of economic circumstances, there are opportunities. So yes, on the one hand, people might be feeling a little bit beaten up right now, but they've also got some pricing flexibility. They have the opportunity, if they've shepherded cash, and a lot of business balance sheets are in pretty good shape, to go out and capture additional customers so that when that inevitable rebound and full rebound comes to the economy, they'll be positioned well to take advantage of that or solidify their position even further.
Yeah, great advice. Goodness knows those of us who've been around long enough, we've seen this play out, and we know that recessions and economic sort of downturns are the time when the competitive order gets totally jumbled up and changed around by the smart companies that are taking advantage of it.
Yeah.
Ron, you do a lot of speaking, and what's interesting to me always is the people who, after the talk is over and didn't want to raise their hand during Q&A to make a comment or to ask a question, what are they coming up and telling you about their business and their concerns and what their beliefs are? Economically, what are you learning from those conversations after the speech is done?
Well, one of the most interesting things I find in the post Q&A environment, where I'm talking to people after my event has concluded, is that I get more political questions than I get economic questions sometimes, in the sense that I think most people these days are coming at economics from a political point of view. Did Trump do great things? Is Biden doing horrible things? Is Biden good? Was Trump bad? Can we go back to the Clinton days or to, even the Bush days where things seem to be more stable? And so everything these days is tinged with politics. When you make a statement that may be factually true about the economy, there might be someone in the audience who may not, again, be willing to say it during the Q&A portion, but may come up to you later and say, hey, you know what? I really don't think that's true because this is what I'm hearing from this entity. This is what I'm hearing from this news outlet. And I don't think that's grounded in fact. Now, I try to live my life as grounded in economic facts as possible and ignore kind of the political noise around characterizing an economy or a sector or the behavior of financial markets. And what I'm finding is that people have somewhat more ground in beliefs than they used to. And that's coloring their view of the economy. I don't happen to be among those who believes in the notion of a kind of self-induced recession. Recessions happen for a wide variety of reasons, and they're not usually psychological. They're very real. What I do find, however, is that opinions of economic activity these days are much more colored by one's political view than economic reality on the ground. And that, from a speaker's perspective, is sometimes hard to break through because everyone, and we know this now, because of social media, because of cable television, everyone looks at this through their own lens and loves the echo chamber in some instances more than they're willing to accept reality.
Yeah. One last question, Ron. What should people be doing with their investments now?
So investors, first of all, shouldn't be panicking. We are probably more than halfway through this bear market. And this is a period in which, when the Fed stops raising interest rates, or should it come to pass next year that they actually start to lower rates because they've gone too far, that is effectively when you back up the truck and start buying stocks and maybe even bonds, although there might be some alternatives you'd be looking at to replace bond exposure. But there's a point at which, and we're getting close, where there's some very, very good companies with fortress balance sheets, large and stable positions in their respective industries that are becoming good values. And so if one is disciplined in his or her approach to investing, first of all, you've been putting money away at the same pace every month. You've been reinvesting your dividends. You've not gone away from your discipline because we're in a downturn, and we have bear markets on a fairly regular basis. And so you really don't abandon that discipline. And there will be a point in the relatively near future that you're going to buy everything in terms of equity market exposure, because the Fed's going to stop raising rates, and you get new bull markets when that happens. The one thing I would say, the closer you are to retirement, the harder it is to maintain that discipline. And so maybe, and this is not a commercial for this type of product, but maybe something that has a guaranteed income feature might be worth it as a portion of your investment portfolio to offset the volatility you see elsewhere in stocks and bonds. So a lot of it depends on age, time to retirement, immediate needs, and things like that, which we all know from kind of basic personal finance. But once the Fed stops raising rates, you buy stocks.
Ron, thanks very much for making time. We're looking forward to having the audiences report back on all of the wisdom they're getting from the speeches that you're doing this fall. You've got a lot of them on your calendar, and it has been a crazy time. Lots of folks very interested in getting your insights on what they should do next. So thank you very much.
Thank you, Tony. Appreciate it.